All right. Hey, everyone. Sean Tagge here with Memphis Investment Properties. And we have one of our preferred lenders, Graham Parham, on with us. Graham, how you doing today?
I'm great, Sean. Thanks for having me here today. Looking forward to talking to you.
Yeah, for sure, man. Me too. So, just starting off, let's just get people to know you. Just, pretend it's the initial call you usually have with people. Tell us a little bit about yourself and how you got started, in lending.
I used to be in corporate America for about 15 years, and I got tired of jumping planes. And a buddy of mine jumped into the mortgage business. This was probably 24 or 5 years ago. And I started watching his success. And I'm just kind of going, if he can do it, I can do it. So I called him and said, hey, let me see if I can take a stab at this mortgage thing. So I jumped in feet first, got rid of a, big fat salary company car, the whole 9 yards. And
Right.
it's been a success ever since. This business is not difficult. It's just people working with people. And so I started off about 21 years ago, and I've enjoyed it every minute. It's like once you get into the business, you can't get out. But probably 2002, well, about 2000, 2001, start doing a lot of investors. And at one point in time, I even tried to run away from it, and I couldn't. Kept getting sucked back
Wow.
in because this whole investor network is a lot smaller than people think. And so I said, okay, if I'm not going to run, I'm going to embrace it. So I chose to embrace it. And fortunately, the venues that I've been working at have actually helped me do just that. There's a lot of companies out there that don't understand the turnkey model when it comes to underwriting. And I don't need to tell you how many lenders have probably come to your door, and then all of a sudden they get the brakes put on by an underwriter. Say,
Yes.
we can't do that. And the main reason is back before the '08 bust. I mean, there was a lot of wrong things. That were doing a lot of fraud in the investment category for unfortunate reasons, which penalized people, good people like you and I. But
Right.
what they were doing is doing straw buying. They had like an appraiser involved, lender involved, title company, the whole shebang, and then they sell these homes, never pay the mortgage, and move the tenant in, get to collect the rent. And so Fannie Mae came up right after that and said, okay, we don't like the seller to be involved in the management post close. Well, you and I both know that's a benefit. Okay.
Right. That
I
that
mean,
that shows that they're in the game, that they like, I don't want to be like 6 months down the road, like, oh, hey, sorry, I messed up on your reno. Like, oh, see you later. Like, it makes it like
yeah,
so where we're accountable. Yeah.
yeah. I mean, the whole concept of turnkey is truly that. I
Right.
mean, I've got a full-time job. All I do is sell to investors, and been doing it for 20 years. But when I want to buy, I don't want to go out and try to hunt it down on MLS or, find a management company, a contractor, the whole nine
Right.
yards. I prefer people doing that for me, which is what you guys do a great job at. So all of my properties, excuse me, that I own all over the U.S. are all with turnkey providers because it just makes sense. So that's how I got involved, and I've embraced it. It's been great ever since. We're probably doing the biggest year I've ever had this year. Nothing to do with the COVID, nothing to do with the rates, although the rates do help a little bit of it. But my report card came out last month, and I'm still doing 96% purchase. So I mean, I do some refinances, but we're growing quite significantly in the purchase category with people like yourself. Um, does that kind of bring you up to
Yeah.
speed a little bit?
Oh man, that totally does. Thank you so much. And also a little background. I see that you're an investor yourself, right?
Correct.
What tell us a little bit about your investment experience.
Well, it's interesting. This was about 16 years ago. I was working with a really large investor. He had probably 400 doors, and
Wow.
I've done probably 150 loans for this guy. And I just kept seeing his tax returns come across my desk. I kept going, what does this guy know that I don't know? Nothing. He's just doing it.
Right.
And so I bought my first property from him, sight unseen. And then after I stuck my toe in the water that first year, I ended up buying like 8. And once you get over the first one, it's a lot easier. And I mean,
Yeah.
it's the best way, in my opinion, for your retirement, based upon my 401k now being a 101k in the stock market, the whole 9 yards.
Right.
This has all been consistent. And I mean, it's just been a fun ride. I bought some properties that maybe I shouldn't have bought over the years, but I've sold them, did an exchange, and grown into a portfolio that I'm really comfortable with now. So it's been a fun ride. I enjoy it. And the great thing about being an investor is working with your clients. I tell them you're going to get two hats, a loan officer, but also as an investor. And I can only give you my opinion as an investor. And my opinion sometimes helps, especially when investors are trying to grow their portfolio. And I've always said the smartest people do the dumbest things. They really do. And I try to keep them on the right path and not let them stray off the path, get snake bit, so they won't be making these mistakes. You know, it's like husbands and wives are trying to grow their portfolio. Well, let the wife do a couple, let the husband do a couple because of the 10 Fannie Mae,
Yeah.
stop, those kind of things. 1031 exchanges, those kind of things will help them out a lot. So yeah, I mean, I like to educate my buyers. Okay, I
Yeah.
like for them to be my partners as they grow.
Yeah.
So
And let's go back what your advice, and I hear this, we say this all the time too, but let's reiterate that the 10 loans per person's name. Can you explain that and why
sure.
you suggest to do them separate? Yeah.
Well, Fannie Mae and Freddie Mac, which is only right it currently is the only people left on the playing field with the whole COVID thing and the liquidity problem that we have going. But we're business as usual, which is great. But the Fannie Mae and Freddie Mac, they limit the borrower to no more than 10 loans per borrower. Okay, so we got a husband and wife. They want to create a nice portfolio of properties, but more than 10. Well, if the husband works and the wife works and they both have adequate income, well, let the husband do the first 10, let the wife do the second 10, or break it up. And I
Right.
see that all the time, not only just with married couples, but partners, business partners, brothers. I mean, this happens all the time until somebody tells them, "Hey, split it up," because
Right.
they go married couple all the way to 10, and now they go, "Well, okay, I want to get some more properties. I want loans." Well, right now, because of the COVID thing, those properties those loans aren't out there, and I'm fannied out myself at 18. I'm at 18.
Right.
I can't find money for myself. So Fannie Mae and Freddie Mac is still going to have your most optimum terms, optimum rates, and quite frankly, I think we give the best service.
Yeah. So yeah, if someone's starting out, yeah, don't put them jointly in your same name because you can only have 10 jointly because it counts for each your name. Separating out 10 for your wife, 10 for your husband. Yeah, we go over that a lot, and I'm glad that there are people out there explaining that to our investors to
Well,
help
like
them.
1031 exchanges. Let's take a couple that's
Yeah.
had 4 or 5 in their portfolio, and they've heard of this thing called asset protection, which I'm a believer in. All my properties are in an LLC, but Fannie Mae has a guideline basically says it's called due on sale, okay, which means that if you change the entitlement of the property post-close, then Fannie Mae, or the servicer, should I say, has the right, which is a very not so strong word, has the right to call the note due. Been doing this for 21 years, and I've had this. If I had $1 for every time I had this conversation about LLCs, I'd have a lot of money. But
Right.
basically, you put your title, your property into an LLC post close. Give at least 3 from 4 months for the dust to settle. With the servicer, because they're going through and doing their due diligence and so forth. Now, I know I'm touching on 2 topics there. One is an LLC, and the other one is an exchange. So let's say they got the exchange, they got 4 or 5 properties. Now they're about ready to do an exchange. Well, the 1031 exchange guidelines are very strict. There's a thing called like as, okay,
Yeah.
which means they got to go from John and Mary to John and Mary on the next home. And if they went from John and Mary LLC, I can't do a loan for them at LLC, so that's going to hang up the exchange. That's the first thing out of my mouth when people say I'm doing an exchange. Then I ask them, how is it titled?
Title, what you're buying in, make sure it's the same as what you're selling.
Right, right.
Right.
So that helps out a lot.
Hey, little tricks of the trade. Actually, that's a new one I'm kind of hearing of too. Yeah, that's good to know. I'll make sure to tell that to people at 1031 exchange. Just make sure to line up that title right.
Yeah, and
Wow.
it's really easy. You'll get a little bit of pushback from an accountant from time to time. Well, you're not supposed to take it out of the LLC temporarily while you go buy another property, so forth and so on. Once again, I've been doing it for 20 years. I've never seen anybody been audited or penalized for any of that. But I'm not an accountant. Okay?
Right. Yep. Don't quote me. I got you. So yeah, let's say, we got a new investor, someone looking to buy a turnkey. They have their life in order and finances in order. They're ready to get rolling. What would they need to do to get a loan to buy their first turnkey property? Like, what's their process? What are they going to have to go through once when they start talking to you?
Well, our process is pretty simple. As soon as I get in touch with the client, I will do a preliminary interview with them just to kind of make sure they fit the mold, find out what their needs are. And then, of course, at that point, I'll send them a link to the application page of my website. It takes 10 or 15 minutes to fill out. Once you do that, we'll circle back with you either that day or the next day, depending on when you fill out the app. And one of my teammates will, basically do another interview after they got the application just to make sure everything is correct. And then we'll send you out a list of items that we'll need for you to upload safely through the portal that we'll create for you of income and asset documentation like tax returns, bank statements, this sort of thing.
Right.
And once we get it all uploaded, well, it takes a day and a half to get your credit approved. And then we put you back into the seller's court and you guys go find a property. So for the most part, once we've done that, once we get the contract and the property's appraisal ready, we order the appraisal, the title work, and we go to close. It's virtually that simple.
Love it. Yeah. So you just help them out, hold their hands throughout the whole process. That's great.
Yeah. And there's a lot of communication points that we have along the way that not only informs the seller what's going on, because what separates us is service, and the service is communication. Okay. If you can't can't communicate to the borrower or communicate to the seller and everybody involved for that matter. I mean, it just won't come together in a timely fashion. Our average turn times are 21 to 26 days. And without that communication, we would never be able to hit those all the time.
Yeah. I mean, every day counts, in this battle of going to closing. And yeah, you got to communicate well. And that's one thing of all of our preferred lenders, we make sure they're on that list because number one, it's basic, communicate, like just respond to emails, coordinate with the buyer, the closing attorney, the lender. It's a lot of complex pieces, but if everyone communicates quickly, yeah, it can close in 21 days or 30. Yeah.
Yeah, that's true. The only thing that's really holding us up these days is the appraisers. I mean, because they're so
They're backed up. Yeah.
But beyond that, so far the turn times have been pretty good with the ones that we have. And we're rather fortunate versus larger operations or whatever, because they have to go through a thing called AMC, which is an appraisal company that they have their own roster of appraisers, if you will. They could have 20 people in your market on one zip code, and that's just a constant rotary dial, and they'll pull. Well, we do it differently. We try to home in on those appraisers that we think does the best job in that market, and we keep our list very narrow. So when that rotary dial is hit, we know that those 4 or 5 guys are going to come through the majority of the time.
Right. Yeah. And it does take a different experience for an appraiser to appraise an investment versus a regular Joe Schmo homeowner. It's very different. Yeah, I agree. So what advice do you have for investors starting out? I've seen you've kind of mentioned a few here and there, but what do you give to, people starting out as investors?
Well, most investors, by the time I get a hold of them, they're information brokers. I mean, they are just sponges. They want to get as much knowledge as possible. And I think that's a good thing. And if I can give them at least 85 to 90% peace of mind of educating what I think they need to know, that I've done my job. So they're going to go through and they're going to watch all kinds of seminars and blogcasts and webinars, read books and so forth. And it really comes down to, what do you want to do? You can't have your cake and eat it too in a cash flow market, in my opinion. Okay. You can't have depreciation and you can't have the cash flow. I mean, if you want the appreciation, the woman hang out in California, take your chances there.
Right.
But I mean, like in Memphis, and all the markets that I work in around the country, it's all cash flow. Okay. And so that's what you have to understand. Why are you getting into the business? For passive income. And that's the reason why I did it, for passive income. I mean, I know people that come to me a couple of months ago and says, aren't you worried about the economy starting to get worse? I'm going, no. What happens if your house depreciates a little bit? Then it depreciates a little bit. I'm going to get it right back. But what's constant is my renter's rent is consistent. My taxes are consistent. They may go up. My insurance may go up, but the rent's going to go up. But everything's consistent. I'm making so much money today on this property. I'm going to make that same amount tomorrow, regardless of how the market goes up. So that's the beautiful thing I love about the stability in turnkey markets. Yeah, we've all seen some fluctuations since 2008, but it's still as strong as it ever has. And I mean, I work all over the country, and I own properties even there in Memphis as well. I was born and raised in Memphis, so all the properties that you're probably selling, I probably knocked on their door at one time or another selling cable TV.
There you go.
But it's a great market to be in. It really is. Memphis is one of the best markets I know for turnkey markets.
That's great. That's great. That's great advice, man. I appreciate that a lot. Lastly, how can people hear more about you, or how can they get in contact with you?
Well, I have a direct dial, which is 855-326-6802. And I tell people I'm a 24/7 guy, and I technically am. If you call after hours on the weekends, if I'm available, I'll certainly take your call. If not, leave a message, I'll call you back. And then I have a website, which is specific to Tennessee. It is Tennessee Investor Loans with an S, TennesseeInvestorLoans.com. And I encourage you to go on that website. I actually have a guide that is free The reason why I wrote this guide is because, like I said, I've been working with investors for 21 years, and they all ask the same questions. And I said,
Right.
okay, fine. I'm going to put it into a guide. And so you're welcome to take a look at it. It's a good little read. It takes a lot of the Q&A that you'll probably have, some that you probably didn't know you have. And most of my barbers that read it really, really helps them out a lot, because it saves me time on the phone with the Q&A, of course. But
Right.
it's a
Yeah.
good little piece.
I see it here on your website, how to make a loan app, you know, the do's and don'ts, loan processing. I like it. What to expect, down payment options, understanding loan process. That's great. Yeah. I love that little book. We kind of have one too, a turnkey starter pack. Same reason. We get the same questions and answer why Memphis, answer turnkey, how to analyze stuff. So yeah, that's great, Graham. Well, thank you so much, Graham. You know, look forward to continue working with you. And if people, you want to reach out to Graham, give him the call, check out his website, download that book, and feel free to reach out to him. He'll help you out and take care of you. All right. Thank you.
Take your time.